So I want to talk a little bit about strategy. So I sort of have this view of the market. Um, so we have the market as sort of that mechanism, that efficient mechanism that connects capital that has choices on where to spend it with business opportunities of various sizes and magnitudes and regions and complexity. And there are agents in the market who facilitate it. There are regulators who manage it and keep it honest. There are observers who comment on it, which can shift perceptions of what's going on in the pool of capital and in the pool of business opportunities. And there are power brokers who can leverage what's going on for their own purposes and cause there to be changes made about how much capital is going to be available, what kind of business regulations are there, how shall the market be regulated. So think of those as power brokers, not just politicians, but also influencers and media. People who can make a difference in the regulatory. And then recognize that in this connection between capital and business, there are other competing opportunities out there for those same kinds of pools of capital. And I've just kind of arrayed these different pools of capital in different sizes, shapes, and colors just to suggest how many different agents and actors there are in that environment. Well, we can think of actors as being the people with the capital, and the reason the market is just so interesting to me and why it's such a confounding game sometimes is that you recognize that for every actor that is represented in this pool of money, and oh, by the way, some of those pools of capital, many of those pools of capital are business enterprises themselves over here. So they are not only the target of investable capital, but they have investable capital that they in turn can act as an actor and deploy throughout this world. And there are agents in the market who act as investors as well, and regulators and power brokers and nations are also involved in that as well. So it's not a linear process. So you can say all those individual actors and in the organizations, the institutions that are in there competing around all have these different dimensions and different arrays of that make each one of them unique. And you might think of this matrix where you have something like a risk profile, people who are based on their constraints, responsibilities, perceived options, training, experience, goals, and objectives, and their culture and their risk appetite. They might have different time horizons, short, medium, and long, whatever that means. Is day trading, swing trading, position trading? Is this days, weeks, and months? Is this months, years, and decades? Is this generations? So every time horizon really can be interpreted differently, and just because we think of it maybe as in terms of days, weeks, and months, there's other people think of that in terms of ticks, seconds, and minutes. So that's really a relative reference. And then inside your risk profile, you almost have a global positioning of like I'm aggressive, normal, or conservative in terms of my risk appetite. And then with each bucket of money that you have, you could think about you might have 5 buckets of money and say, hey, I got some here, maybe I got a bunch here, a large pool of capital here, and maybe some swing here, and then some day trading or whatever it may be. So you might have different magnitudes and buckets, and so you could end up having a composite risk profile that's different than just one point on that curve, depending on the pools of capital or how you've structured your thought process. You might have different valences with all that. Well, that's why it's kind of a fool's errand to try to figure out, what's everybody else thinking? Well, everybody else is thinking all the possible thoughts. If there's a thought that can be had out there, somebody's thinking it, But to me, this starts getting into a description of what's going on inside your head, part of a self-awareness, self-understanding, and how you've structured and organized your thought process with respect to asset allocation. And so as we think about the world now, we might, if we're going to adopt sort of a short term, and hat tip to Aswan Damodaran, a world authority on valuation and a really smart guy. A lot of respect for him. With his permission, I'm sharing this stuff. No disagreement that the virus will cause the economy to go into a deep recession. Don't disagree with that. Since it's going to be shut down for at least a couple weeks, and it's more like 3 months. All of the economic indicators are going to be shocked. And then the interpretation of that will get leveraged in the media. So, really, 2 questions. How quickly will it come back? And when it does, how completely will it recover? And that's sort of the immediate response. Stop the bleeding, And then the second one is, what's the long-term change to economic structure and psychology? So if we think back to this, we can think of this sort of as the short-term thing would be the transactional nature of the market, its scorecard, is it going up or down? But then the long-term structure is what happens to the availability of capital, the willingness to put it into this market rather than other competing opportunities. What kind of structural changes are going to be made by power brokers, regulators, and agents as a response to what has happened? And then how are the opportunity space, what's that look like as winners and losers are declared and picked and supported and morphed and reconfiguring? That $4.5 trillion that's going to the big corporations is going to set up a feeding frenzy of buying less robust, more vulnerable businesses. So we're likely to see a large consolidation in a lot of industries and nations. You could even see long-term structural things like a return to the New Deal, or a return of the reverse engineering of the globalization of supply chains. That's, to me, the no-brainer. Well, if that's what that other ecosystem looks like, now when we start thinking about our ecosystem, these are the approaches that we take to navigating through that jungle of an ecosystem. Starting with a learning ecosystem and a preparation ecosystem. Plan, prepare, execute, and assess. In planning and preparing so that I'm then ready to trade. And then when I'm ready to trade, I can execute it well and then assess it correctly. So planning and preparing, kind of what we're doing now. Execution, some of these elements and key mental models. Then in the assessment area, ways that we can assess how we planned, how we prepared, how we executed, and then we can assess our assessment itself. And looking at ourselves as key components and actors inside our own ecosystem. We can be thinking about the ways we learn, the ways we build capacity so that we're better as a consequence of how we learn from the experiences that we generate. And if you want to be adaptable in an adapting world, then it's your maximum sustainable rate of learning that is going to allow you to stay current and to maintain your edges and define new ones. And then we can take a kind of a business-like approach to the things that we're doing over in here with management, where we can take a look at, who's on our team and how are each of those voices, those business-like voices and the roles they play, how are they manifested in our operations? What kind of what kind of processes are we using to get better in a business-like way, using sustainable business processes like visual systems, robust systems, Kanban and Gemba approaches to craft knowledge. How well do our research and prototyping systems scale? How do we go from conception to backtesting, paper trading, prototyping, limited production, full rate production, so that we are rolling out capital consistent with observed performance in the world and real competition? And how we're, to borrow the, Mintzberg's ideas, how are we getting better in all three of those elements of effective leadership and management: the science, the art, and the craft knowledge? How are we systematically going about our business so that we're doing all the right things, so that we have to-do lists and certain projects and priorities, and how well we are ranking the importance, the time urgency, and therefore the priorities? What kind of work, that if that's our to-do list, how do we limit our work in progress to make sure that we can actually become efficient? And then how are we keeping score on the work that's completed? That's sort of a Kanban and lean thinking approach to all the things that we know we have to do to run our business correctly, to be business-like in our approach to capital management, to the management of our learning, to the investigation of new ideas. So not just doing the things that we like to do, but doing all the things that we need to do. And then how are we aligning who we are and what our goals are with these operating processes, and then working in different time frames at the level of strategy, where we're concerned with what our purpose in life is, and our identity, and what our missions and values are that guide. And then the kinds of tactics that we employ to ensure that in everything that we do there is excellence and risk management and sustainable performance and a focus on the outcomes. And then having the operational connection between the grand visions and of strategy with the daily task of trading, and that using an operational view to connect the ends, ways, and means, and figuring out how to manage things in a certain way so that we can maintain alignment in our between our strategies and our operations. So all of those things kind of go into play. Well, if these are kind of the 600-pound gorilla, the questions that everybody's trying to sort their way through, we might summarize kind of quickly by saying, well, there's at least 4 kinds of strategies that conventional and traditional thinkers are looking at. First, looking at that world of opportunity that's out there. So if we look out in this and take our lens and focus in on all these different business opportunities with our little pool of capital over here, we're trying to figure out where to deploy it, and then trying to make decisions on, for each pool of capital, which one are we talking, which block are we talking about, and what kind of objectives are we trying to achieve, and what kind of time horizons, based on a consistency with our risk profile and our identity of who we are and all that. We could think of 4 generic strategies, sort of like bargain basement. And this one, look for the things that have been smashed and are therefore on sale. Maybe they've lost 40 to 50%, but they have survival basics, things like large market cap, low net debt, and maybe better than their peers to be able to survive the pandemic winter of the post-virus economy. So we're looking for survivors that, even though they've been hit, they have the residual strength, especially if they're using that free money from the Fed to start buying up assets on the cheap, and then using their proven business processes to get into to turn that around. Maybe a riskier one is looking for stocks that have maybe even lost more than average, and which have high net debt and fixed cost, but looking at um, the most risky ones, saying, and just betting on their survival. And so in this strategy, we're really, this is essentially buying options on them. Say, well, even though they're close to death, I don't think they're going to zero, and so then the recovery will be that much stronger. Government bailouts are kind of the wild card on here, because while it may lead to survival in some form, it might end up getting them regulated, or there might not be the opportunity for growth that you might think. So distressed equity is, it's like bargain basement on steroids, that there's actual reasons to be concerned about their very survival. So something like Boeing kind of falls into that category in my view. Well, we might then say a safety at a reasonable price. You remember just a month ago we were talking about growth at a reasonable price. So safety at a reasonable price. They have two things going for them. They're not only best positioned to survive this downturn, but they can actually, they have ammunition in the form of capital and money, time, capacity, potential to make the downturn work in their favor. So if they're a large market cap firm, low debt ratios, lots of cash, Apple, that have had high growth and profit in pre-virus economies, they would be good candidates. That's why something like Apple is really an opportunity, whereas I would say something like maybe Tesla might be something like a bargain basement, although they don't have much low debt, but there's an opportunity for them to buy the future on sale. Well, this is where actually, so Tesla, a better example for Tesla would be a change agent. So this one says, hey, the world's not going to end, and although they may not have the best economic posture now, but because of the anticipated rewiring in the world that we talked about on this chart, where we said, hey, the way people think about deploying their capital will change. The shape of business opportunities you can invest in are changing. The market itself and the way it's being run and regulated, observed, and manipulated is all going to change. And there are other competing opportunities for money. So whatever the shape of that larger ecosystem looks like, if you had an opinion on that, then a change agent is a bet on a company that you think is going to be better postured in the future to take advantage of those emerging trends when they come about later. So that's where something like Virgin Galactic or Tesla or that lithium battery company we talked about, or the cannabis or adult education or something like that might, or companies that are more likely to benefit from a change in national health care, as an example. So we can think about, when we think about our opportunities here, it's kind of easy to be, get locked into just the short term. Hey, what do I want to day trade tomorrow? Or what do I want to maybe start initiating some swing trades on things that are already starting to turn around? Or what do I want to, buy and hold? This for me is like the U.S. steel I think about in this category over here. This one might be cut that timber or energy, or Devon Energy, for example, or the volatility trade, or short-term finance, or Boeing, or something like that. Or I might want to be very speculative and say, I'm just going to buy Boeing and forget about it for 5 years, or buy the triple Dow and say that 40 years from now in my kids' IRAs, if there's any one index that will still be around, I think I'd bet on the Dow 30 Industrials in some form. So why not buy that thing when it's on 50% sale, as an example? So as you start thinking about posturing, then the intention would be is that weekly report that we do should really give you opportunities to start thinking about different buckets of money and different approaches to trading the different time frames, and then trading inside those time frames at different degrees of leverage. And then you have, in the space now that I'm showing as yellow, this is where those core and turbo strategies now start to make sense. That if I'm looking at a combination of short and medium time frames, that the medium time frame is core and the turbo is short, this little space in between is how each of those regions can talk to each other. It may be something like this. Is now the medium, the swing trade is the turbo, and then the long term is the core. So I can have regions in between there. Similarly, I might start off with some things that are, or I can think about the the overlap in these different regions. That with some amounts of money, I could start off with a conservative position that grows slowly into, after it's earned its way, it can start paying for itself and become a longer term position. So you might end up having money that starts down here, aggressive short, then starts migrating towards long term and conservative when it's paid for with market's money. So once you start thinking of your portfolio as a set of buckets that are related, you have a meta system. This is the area where that knowing yourself and sort of identifying all these aspects of your operational environment allow you then to pick systems that allow you to operationalize the goals and objectives that come out of your unique situation. So that's why I would say I'm really excited about this talent LMS thing. So